What's up YouTube? Dougie Chong here. Welcome to today's YouTube video where I'll be talking about one of the least understood savings accounts here in Canada known as the RRSP. Now, I put a lot of research into making this video, so leaving a like and subscribing would be greatly appreciated. First of all, what exactly does RRSP stand for? Well, it stands for a Registered Retirement Savings Plan. Essentially, it was made to try to force Canadians to put away money for retirement. The RRSP was established in 1957, so it's been around for quite some time. Back then, the maximum amount per year you could contribute was about 10% to a maximum dollar amount of $2,600. Today, the amount you can contribute is 18% of your annual income, up to a dollar maximum of around $26,000. I'll leave a link with the exact numbers below, but as you can see, it's drastically changed over the years. I'll also note that this video will only be explaining what an RRSP is and giving a few examples. It will not show a comparison of RRSP versus TFSA. That will be in a later video. So a more accurate name for RRSP would be a tax deferral account. So unlike a TFSA, which is 100% tax-free, and when you take it out, it's also tax-free, an RRSP will be tax-free up until the age where you're forced to take it out, and then you will have to pay the tax at that point in time. It is this tax deferral structure that makes it so complicated to tell if an RRSP is right for you. But generally, if you are in a low tax bracket now and expect to be in a high tax bracket in retirement, then it's not a very good idea for you. However, if you are in a high tax bracket now and expect to be in a low tax bracket in retirement, which is the case for most Canadians, then it's a good idea to have an RRSP. But if you are expecting to be in the same tax bracket now and in retirement, then it's just a marginally okay idea to have an RRSP. For those of you that don't know what tax bracket you're in, I'll leave a link in the description below, but basically a tax bracket is just the percentage of tax you will pay on your income depending on how much income you made during the year. Different types of income are taxed at different rates, so this formula becomes extremely complicated. The main other two rules when it comes to RRSP is how much you can contribute and when you're forced to take out your RRSP. So, the maximum amount you can contribute changes from year to year, but generally it's around 18% to a maximum dollar amount of $26,000. Now, any unused contribution room from previous years accumulates forward indefinitely. So if you don't use your room this year, next 3 years, you can still use it in the future. So if you are in a low tax bracket now, it's a good idea to save this contribution room up until when you're in a higher tax bracket. I will now go into detail for some examples showing an RRSP account versus a regular savings account. I made this in Excel using a spreadsheet. I'll see if I have a way to link it below, but eventually I want to turn this into a program for everyone to use. So this is the gigantic spreadsheet that I use to calculate RRSP and regular savings accounts. The reason it is so big is I want it to be very thorough, keep track of the initial amount of the year, how much you contribute, how much you expect to get in gains, how much you have to withdraw, how much you actually withdraw in retirement and use, and then how much tax you have to pay, even after retirement. A lot of RRSP calculators will calculate the amount up to your retirement age and then stop. Mine, I calculate all the way through past retirement. What I also do is at the retirement age, you're forced to take out some RRSP and use it, some to live, of course, and then the extra amount I invest in another savings account. And then I calculate that, compare that against just a regular savings account. I'll explain what this RIF minimum column is. It's basically this chart over here. It'll give you an age on one side, and the other side will be how much of the RRSP you have to withdraw if you were to close your RRSP that year. So at age 74, you have to take 5.67% out. Age 75, 5.82% out. And they slowly want you to deplete it so that they get their tax money back. B1 is just how much income I expect to have. I just put 100,000 for this example. B2 is the amount of contributions per year to the RRSP. In this case, I'm going to put $15,000. B3 is the percentage gains I expect to get from my investments every year. 0.04 equates to 4%, which is fairly reasonable for gains considering inflation. So B4 is the age started. Some people start earlier, some people start later. I just picked age 25. B5 and B6 are the retirement and working tax brackets respectively. These are the most important values that will affect whether RRSP is better or the regular savings account. 0.5 is one of the highest tax brackets you can possibly be in, and 0.3 is one of the lower brackets you can be in. The exact bracket will kind of change slightly, but these are some approximations I made to simplify the formula, which is already complex enough as is. I set the assumed retirement age to be 60. I found as you change this later on, it gets worse for the RRSP since it saves for so long that it grows to a point where the taxes you have to pay are extremely high. B9 is the expected amount you will take out of your RRSP in retirement, and you'll spend this and you'll have to live off of this. I have 40K set for that. B10 is the extra RRSP contribution room you will get from making your initial contribution. So if you pay $15,000 in contribution room, you will save $4,500 in taxes. So this whole spreadsheet assumes that you'll also be investing that $4,500, not going to Vegas, not spending it unwisely. So in this case, I'll look at these charts at the bottom. The top chart just shows how your RSP grows, and then at retirement age, it uses the leftover money in a regular savings account. The bar graph right underneath is just the addition of these two lines. As you can see, the account grows really fast up until age 70, faster than the regular savings account. But at this point, it's taxed so heavily that the gains after age 70 are not as good as the regular savings account. So in this case, you end up close to 3.5 million, and in the regular savings account, you end with closer to 4 million. Again, this is assumed you'll live to age 100, which who knows if that can happen. But now if I just change it, flip it the other way around, a more realistic scenario where your working bracket is 0.5 and your retirement bracket is 0.3, you will see a very big change where your RSP plus regular savings account will be over 5 million and your regular savings account will be just over 4 million. You can see how RSP is much better in this situation. The final situation I will show is if you're both in the same tax bracket when you retire and when you're working. If you look at the charts in this case, you end up with around 4.5 million in the RSP and around 4 million in the regular savings account. So the RSP is still better, but it's not crazy better like before. Again, all these variables change it quite a lot, but in general, if your working tax bracket is higher than your expected retirement tax bracket, it's a good idea to use your RRSP.
That's it for this video, guys. Thanks for watching. Hope you learned a lot about RRSPs. I know I did making this video. I knew a few of the basic rules, but going through all the examples really showed me which times RRSPs are good and which times they are not as advantageous. Please leave a like and subscribe if you have not already. Leave a comment if anything did not make sense. I'll definitely be revisiting this topic in the future. There's so many combinations of what you can do with RRSPs, how much you withdraw, how much you contribute, how much you make. It's all very dependent on a whole lot of variables and unique to each situation.